What's up, hello peeps? It's been a minute. Exams finished now, so I am going to literally just give you all the videos that I promised that I would have given you guys. So in this video, we'll be talking about how to invest your first $25,000 as a Jamaican. If you don't know anything about investing, we're interested, this video is for you. Of course, don't forget to like, share, comment, subscribe, to a friend, and yo, that's it. Let's begin. Before we even start, I just want you guys to know that I'm not a financial advisor, and this is just general information in addition to the processes that I took when I just started investing. Yeah. Before you start buying stocks on Jamaica Stock Exchange, you will need a medium or a middleman in order to execute those transactions for you on your behalf. And I would say use JMB, not sponsored. It's just, as I say, is what I did at then, and it worked out pretty well. And what I love about using JMB is that one, you don't have to send an email to anybody or call or text anybody to like buy or sell stocks for you or any of that. You literally just go on the website and you do it yourself. So that was one of the perks that was good. And the beauty about it is that JMB is so integrated that the bank and investing arm is basically one and all the same thing. So what you can do is like you do an investment and you probably have some extra money leave over and you want to spend it, you can literally just transfer it from your equity account to your card and you can draw it off like within seconds. So one important recommendation I would say is that whenever you open an investment account at JMB, just open a regular bank account at the same time. You're going to be literally the same thing. You're probably just going to sign 2 extra papers and that is it. And the beauty is that you get your JCSD number the same day. You might say, alright, you don't know like the prerequisite for JMB. Well, the prerequisites are you're going to need one form of national ID. It can be a driver's license, it can be a national ID, it can be a passport. You can also need a proof of address. The proof of address is really just to say, alright, you say you live here, so this is where you live. And the proof of address can be older than 6 months. And sometimes I have persons that don't necessarily get bills or bank statements or anything in their name. So one trick you can use is like literally just write yourself a letter and then just drop it at the post office, and then when the post office drop it back at your house or you have to collect it, regardless you'll have the stamp on it and that can be used as a proof of address as well. So yeah, you're going to need proof of employment. Proof of employment is, yeah, you make money, where you get money from, where you invest in it. If an adult, you get pay slip, or you can go to the boss and like get some farmer letter to say, alright, you're working. Or if you're like a student, like you can literally just say you're a student, accompanied by a letter to say, alright, my son or daughter XYZ, and I give him money on a monthly basis, right? As allowance or lunch money, right? So that would just be your parents saying they give you money, but you'll also have to accompany with their pay slip. So their pay slip and letter, and you're good. If you like, then I'll work on it up here. And the last thing that you're going to need to actually like open the account is $25,000. When I was doing it, it was $10,000. So start invest. Who knows? Maybe at 35 next time or whatever. However, do know that there are brokers that like charge cheap, because Victoria Mutual is I think $5,000. JN Fund Managers is $5,000 as well. So there's that. If you don't really have that money there. But I'm going to explain a little trick to you. So because the system is so integrated with JMB, basically what you can do is, say you have $10,000, you can spare to invest. You can, I'm not recommending borrowing, but you can borrow money from like a friend or somebody, borrow the extra 15, and then like when everything is said and done, because everything happens within the same day, when everything is said and done, you can literally just go to bam, transfer back the 15 grand to the card, you draw it off and give back whomever you borrowed money from. And then not only you get your account home, nobody don't lose their money, and then you can use 10 grand and just buy your stocks. And as I say, JMB not sponsoring this video or nothing. I'm just saying I'm a customer, so I'm gonna know, and the implementation of it is pretty good. The only thing that probably close to the implementation of it is probably NCB capital market, because you literally have the savings account and the investment account all in the same place. So now we have the stock account. Which stock must buy? And there are a few things that you like need to know before you actually buy. When I started out, I went head on, but may I tell you, just one, you're going to need to learn how to actually do research. And research comprises of several factors. However, as a beginner, like the three main thing, I would say, one, understand how the company makes money, like how they make money, how the business survives. Two, understand which industry it is predominantly in. And when I say that, because alright, so you have Grace. Grace is in manufacturing, finance, everything under the sun. But they predominantly do manufacturing. So there is that. And three, you're going to need to understand if the company is making more money this year compared to last year. Alright, and you understand that based on understanding the financial statements, which you have three financial statements that we as investors typically use. You have the balance sheet, you have the income statement, and you have the cash flow statement. So at the introductory level, the income statement, you just want to see if revenue is increasing year by year, but also ensure that the net revenue is also increasing. Net revenue is literally just like after everything, take out tax, cost to run the business and everything, what is the money that company have left and that can potentially be shared out to shareholders. So yeah. And for the balance sheet, we really just want to know that the assets are increasing year by year and liabilities are falling, or if the liabilities are not necessarily falling, just ensure that the total assets are larger than the total liabilities. And then from that, now as you incrementally evolve, you understand ratios. But I won't go too in depth in this video about ratios, but if you're interested in stuff like that, just leave a comment down below. And another thing I can say is like literally just invest in yourself, invest in understanding more about the stock market, because this short video not going to explain everything to you. So you can read books and like try to figure out certain stuff, or you can, like, I have a course now. Yeah, of course. So at the end of the video, we'll explain more about that. We just want to finish this and then we can go back to the advertisement. So yeah, the next thing that you will need to understand is to understand like what type of investor are you. And personally, I chop up investors into three main categories. Yeah, dividend investors, stable stock investors, and growth stock investors. Personally, I'm a dividend stock investor with a little bit of growth, but predominantly I am a dividend investor, which I just like to see, like, money coming back to me, even if not enough, because regular I'm come home with like some 5 and 10 cents, but just the mere fact that you're getting something is kind of unreal. Like I said, oh yeah, actually I get money from the company. So yeah, as I say, you have like three types of investors in my eye, basically. So dividend is, as I say, just an investor that wants cash flow going back to them. So there's one. Then you have stable stock. Stable stock investors are typically investors that are not, like, they don't have a high level of risk tolerance, which means they want the highest possibility of them keeping their money, which everybody does, but lower risk comes with lower rewards. So that is stable stock. However, the characteristics of stable stock is that predominantly those are like companies that have been around for a very, very long time, so they're well established and they're mature, so there's not much growth like left. Is just them a cruise are going to make money and rotate it and capture enough of the market and rotate it. See? And typically stable investors are like persons who are already rich, them have the money, so their aim is now to just preserve the wealth in the the life of the company. And lastly, you really have the growth stock, which is literally opposite of stable stock for the most part. Normally, growth stocks are companies that are relatively new, and when I say relative can be like 10-15 years, relatively new for the most part, and they have like a high possibility for growth, means them still have a lot of market them can capture, among other stuff. So the only downside is that it's a bit more risky because businesses tend to fail. You can't run from that. But the risk of it is higher with growth stocks than of stable stocks. So yeah. The beauty is though that with growth stocks, like you have a higher chance of making more money on your stocks. So with that information, I hope you can kind of figure out whatever investing you are. However, you only know that you don't necessarily have to just pick one style of investing. It can be a combination of two, or you can just have a mixture of all. The more the merrier in this case. Diversification is just to preserve wealth, basically. Suppose you want to preserve your wealth while have like a skin in the game where you have possibility for grow all while getting like a dividend and community. So yeah, it's really up to you, and you have to answer that question for yourself. And suppose you're just not really sure like what you are right now or whatever investing, but you still want to invest it. You can invest in like mutual funds, which most brokers have. Or as of right now, there's two, I guess, aggregate of companies called Sagicor Select F and Sagicor Select MD. Sagicor Select F is basically just a combination of all of the financial institutions on the stock market, and Select MD is, as it says MD, just a combination of all the companies on the stock market that has manufacturing or distribution to it. So yeah. However, you'll know the fund is like it fall from grace right now, and it can be a good thing and can be a bad thing. The thing is, we're in a down market right now, so most of the companies that the fund invested in are down. Case in point, NTB was at like $200, and now it's at like what, I don't even know, like 80 ad, 90 ad, 70 ad, somewhere around there. So yeah, but it can be a good time to buy, which is like it's cheaper now, so you can get more. But talk to your advisor about that if that decision is best for you. And essentially, the last thing I want to talk to you about is the mindset of a true value investor, because I think you're looking for value to buy into companies, but I'm going to give 4 points, basically that things that I've observed over the years, 4 or 5 years now of investing, say kind of build up. So number one being that investing should be boring. You're not supposed to every day I look on the sheet, I watch the market, unless you're in the field as a like expert. Like investing is supposed to be boring, and you just buy stocks that you have done research on and everything, and then you just invest in it. You can automate it, and the aim is just continuously buy in it at different intervals, and sometimes even at different dollar values. So you get like a combination. Sometimes you buy it high, sometimes you buy it low, but over the long run it essentially eventually trickles out. Yeah, so investing should be like a long game. Like it should be a long game over long period of time. If you put 10 grand in an account now, like much now go on, even if the stock go up 20, 30, 100%, that's really just like extra 10 grand. So if you just invest one time and think, oh yeah, go reach out for this, that's not the case. But by continuously doing it, say you can put 10 grand in your account every month. By the end of the year, that's 120 grand. You see me? And that's where I invest. And in addition to the fact, it probably be going up. If you're going down and you still believe in the companies, and you go to your financial advisor and they must say, good company, pay with the rate, you can continue buying it. Look at it this way. You basically just buying the same thing you'll be buying at a cheaper price. So yeah. So just understand that the stock market does go up and down daily, but over the long run, it essentially most time goes up. So as I say, you don't need to check your account 24/7. Maybe like every month or every 2 months or every 3 months, you just check for say where we're at or where we're at. So yeah. Two, and this is something that is very, very, very important. Find friends that are investing as well. The thing is, investing is really a lonely road for the most part, and if you don't have like a group or you don't have some form of support system for alright, you invest, or you see something in the market you want, like when you buy somebody, it's best when you have like a one or two friends you can run that by, or even a community. Is it me? They have a lot of communities and I'll leave one in the description below as well. We can join and just ask a question. I'm always talking there about everything Jamaican and even international. So you good right here. So three, three, three. If the company that you invest in have some social media, say for example you invest in Honeybun and they have social media, follow social media, like you can go on Instagram and follow them, and one that will keep you up to date as to like the company's progress, but also like it just helps for like whenever any news come out or anything, it is also there. And while at it, you might as well just follow me to guard underscore grant underscore 876. So yeah, and can say hi to. And the last thing that I want to say as it relates to a mindset of an investor is that real money is made before everybody actually spots it. So like case in point, RPL, which is Regency Petroleum, I have just been buying shares in it for me, and it's a case where I knew it going to go up. I know it's at, I've been buying at like $1 and like $1.30 and $1.40. I've just been buying at that price. I think I'm averaging right now for $1.50. And I think I checked today and it was at $3. So today would be, let me check the date. The date is May 18th. So it's around $3. So that's where the true money is made as an investor. Yes, you can follow like the IPO hype and name something there, but sometimes it's not good to follow the masses. Sometimes the aim is silent. But yeah, and remember that you're playing a game where there are other persons in the market that is way smarter than you. Is it me? At some point when IPOs come out, everybody buying an IPO, but at what price do you stop buying? You can jump on and jump off quick, or jump on and hold, and then them sell and then you end up pull back. So, those things to think about. But if you're still here, this is the advertising section of the video, but I'll make it worth your while. So if you make it up to this part of the video, then that mean you're kind of interested. And here's where I'm really advertise my course, which is for 8,000 Jamaican dollars. Cheap, cheap, cheap. Not really this is money. So yeah, so basically the course consists of around 30 videos, some short, some large, but it's your own self-paced. You can watch it at your leisure. Is me, and it teach everything from like what is stock market, like basic what is stock market, all the way down to more complex stuff like understanding ratios, analyzing companies, and so on and so forth. In addition to that, you also get like 2 worksheets. You get one which is just like a document for like kind of help you understand your finances more and try help you to actually like save more money in order to invest. So there's that. And the second worksheet essentially is the stock tracker, which basically, as it says, track the stock market. There is a part of it where that it just tracks the whole stock market. Personally, I just use it to like see which company is paying the most dividend. But you're also the part where you can put in your portfolio and it shows like increase or decrease in value of your stock, and it automatically updates. You're not worried about that. There is also dividend calculator, a weighted average calculator, and even a bond calculator. So there's that. I'll also introduce you to all the apps that I personally use to invest, and I kind of get ahead of the crowd. So there is that as well. And to make it more spicy, I guess, make the deal more enticing, basically, for everybody who orders a shirt between today, which is May 18th, and June 20 to 28, I will be giving away a free Poverty is a Sin t-shirt to everybody that orders, so just DM me on Instagram if you're interested and we can conversate on that. You can either get Poverty is a Sin or you can get Loading Millionaire, anyone you choose. But yeah, that is my little advertisement. And that is it. Thank you for watching. Ensure that you like, share, comment, subscribe to a friend, and well, hope you have a wonderful rest of the day. As always, love you guys, and catch you in the next one.